Calculate the time value of money by Lisa Rittenhouse. Time value of money is one of the most important concepts of finance. Time value of money is the difference in value between money received in the future. Also, the observation that two cash flows at two different points in time have different values. Time value allows comparison of cash flows from different periods. A dollar received today is worth more than a dollar received in a year. A dollar in the bank earning a 10% interest rate will end up being $1.10 at the end of the year. Interest rate. To calculate the time value of money, you first have to understand the rates that change the value of money. Interest rate is the rate at which money can be borrowed or lent over a given period. Interest rate factor is 1 plus the interest rate. It is the rate exchanged between dollars today and dollar in the future. It has units of money in the future and money for today. R equals the interest rate, therefore the interest rate is, the factor is 1 plus the rate. Discount rate is the appropriate rate to discount a cash flow to determine its value at an earlier time. Discount factor is the value today of a dollar received in the future. Present value. Present value is the value of a cost or benefit computed in terms of cash today. If we expect to receive a check for $25,000 in 3 years and our cost of funds is 9%, the present value of the future payment would go like this. The present value over equals the future value over the interest rate, which is 1 plus R plus the number of years. PV equals 25,000 over 1 plus 0.09 interest rate times 3 years, since it's over 3 years. That then, you would then take the 25,000 divide it by the interest rate 3 times to get your present value, which is $19,304.59. Future value is the value of a cash flow that is moved forward in time. Example, if we have $1,000 today that we put in the bank, that will generate a 12% per year for the next 2 years. How much will we have in the account in 2 years? So it's present value, the interest multiplied by the interest rate, the number of years, equals the future value. So you would take the $1,000, multiply it by 1.2 2 times to get the present or the future value, which is $1,254.40. Ethics. An ethical issue that came to mind was in reference to interest rates and exorbitant fees for a service. Places of business are also known for placing hidden costs and fees in the fine print, knowing people either won't take the time to read them or will just skim through them prior to the transaction. Businesses has to make a living, but my question is, does this cross the line of being unethical? I believe that this does cross the line in a way that is lying to the customer. the Bible on the value of money. Over 50 times the Bible references the sins of being dishonest and lying. Proverbs 13:5, the righteous hate what is false, but the wicked make themselves a stench and bring shame on themselves. People, one goal here on earth is to make sure that their actions and words are always pleasing to God and will bring him honor at all time. God is incapable of lying, but people lie every day, whether it's to themselves or stretching the truth or the infamous little light lies that people tell so frequently. In the Bible, God is truth and God is all about goodness. So whether or not it's in our daily life or in our professional life, we have an honor to bring glory and honor to God at all times. This concludes my presentation. I hope you've enjoyed it, and God bless.